After a sizable correction in the US stock market, the US market bounced back quite strongly in the last week. All the major indices like S&P 500, Nasdaq 100, and Dow Jones Industrial Average Index bounced back very strongly over the past week. However, the Nasdaq 100 outperformed the S&P 500 and Dow Jones Industrial Average Index. Before we begin the technical analysis of the market, let us check the market sentiments that has driven the US stock market. So this is the fear and greed index. Currently it reads at 35. So it is in the fear zone. 1 week prior, it was reading at 23. So it was in the extreme fear zone. So it is a kind of oscillator which oscillates from extreme fear to extreme greed zone. So it's a positive sign that the market sentiments has improved over the week in the last week. If we check the market sentiments, market momentum, the market momentum, S&P 500 dipped below simple moving average 125 period, and now it has bounced back. So this particular indicator is indicating that the market is in a greed zone. Now, if we check the further on fear and greed index, let us check the put call ratio. 5-day average put call ratio currently reads at 0.78. Options are the contracts that give the investors the right to buy or sell index. So this indicates that it is currently in the greed fear zone. Now let us go and check the volatility of the market. In last few days, the volatility has gone up substantially higher. I'm talking about the VIX that represents the volatility against broader market index S&P 500. Now the volatility has reduced sharply and it has come below simple moving average 50 period. So this particular indicator is indicating that the market is in the neutral area. So let us go back to the chart. This is the price chart of S&P 500 index in weekly time frame. The index in the last week finally closed at 5,554.26 and hence it was bullish by 3.93% on week basis. Can we see past 2 weeks of bullish candlestick, which indicates that the price has taken support in a zone between EMA 21 and EMA 55. This was the prior impulsive wave. So it has done a very sizable correction, a healthy correction, then it is bouncing back. If we superimpose some of the technical studies, earlier we had seen the formation of a rounding bottom pattern. And here, if we check the targets, let me do exercise for it. So it has achieved the first target of 61.8% expansion level with respect to the rounding bottom pattern, and then correction started. Now, on resumption of this trend, the next particular target is obviously 100% expansion with respect to the rounding bottom pattern, which arrives at around 6,300 level. However, it will not go in a straight line up. Instead, it will form the market structure like higher highs and higher lows kind of structure. Now, let us go to the daily price chart to understand the recent price action. Now, can we see here? It even defended here. EMA 21 did not cross under EMA 55 during this complex kind of correction. This was the ABCD pattern, which is a complex correction. Price took support here at resistance area and then bouncing. However, there has been a parabolic rise in the recent time. If we check the correction, extent of correction, the correction has been around 9.7%. While we check the bounce back from the low it has made, it has already recovered by over 8%. So there is a strong bounce back in the market. Where is the support area? During this upside move, there is an existence of a gap which was created on 15th August 2024. This looks like as a runaway gap. If it is a runaway gap, then market may run higher. Runaway gap is usually called a measuring gap also. If I measure this and project from this gap, so the potential next level comes at 5,800. So S&P 500 in short term can move up to 5,800. And currently it is trading at 5,554, which means it is likely to make record high in near future. So coming back to the support, this gap itself will provide the support because there is a consolidation band as well over here. So 5,463 to 5,488 to be very precise is likely to act as a support zone or demand area for S&P 500 in the upcoming week. While on upside, there is an existence of a gap. This gap is in a range of 5,622 to 5,639 could be the potential area where it may face some kind of loss in upside momentum because it's a supply area. And then probably may correct or consolidate to give a breakout like this could be a upcoming cup and handle kind of continuation chart. Because overall trend is still bullish. Uptrend still remains intact in S&P 500 index. So now let us move to the price chart of Nasdaq 100 to undertake technical analysis. Let us first visit the weekly price chart. This is the weekly price chart. What we can see, this index in the last week closed at 19,508.52 and thus it was bullish by 5.38% on a week-on-week basis. Very strong bounce back after it has taken support on EMA 55. Here also it took support at EMA 55 during this correction. So EMA 55 on weekly chart is acting as a dynamic support. Here too we can see the breakout of a rounding pattern. So let me superimpose some of the technical studies. Can we see here? Price consolidated for a long time, gave a breakout. So this trend line, the moment it gave a breakout, indicated a very strong breakout of a symmetrical triangle. Price support, price support, price support. So this trend line combined with this trend line has formed the symmetrical triangle kind of formation. And there was a breakout in the month of November 2023. So if I calculate the target on the basis of this symmetrical triangle breakout, what it has done, it has achieved the first target of the symmetrical triangle, which is 61.8% expansion level. So next target could be to 23,900, 890 to 900, 23,890 to 23,900 is the target. That is 100% expansion with respect to the symmetrical triangle. So overall trend here is extremely bullish. Now let us go to the daily price chart to understand the recent price action. What we can see, this index had a sizable correction from the recent peak and this index corrected to nearly 15.7% in the recent time. And if we check the bounce back from the low it has made, it has already given a bounce back of nearly 12%. So quite a strong bounce back. Most importantly, if you look at this trend line, price support, price support, price support, price resistance, zone between these two trend line, we expected that there will be some kind of resistance. But on 15th of August, there was a breakout of this trend line with a breakaway gap, with a rise in the volume as well. That indicates the strong momentum on upside and bulls were in absolute control. So this gap area, this area where there is an intervention of EMA 21 and EMA 55 also, 19,000 to 19,100 is a good demand zone for Nasdaq 100. However, there is an intermittent support also because the price got rejected here. There is an existence of a gap. So 19,240 is an intermittent support in Nasdaq. Now let us discuss the potential supply area. There is an existence of a gap over here, and that gap ranges from 20,080 to 20,267 is likely to be potential supply area where the price may consolidate and once again form some kind of continuation chart pattern and give a breakout of this particular resistance area, which is a consolidation area. Now, what could be the potential in immediate target for Nasdaq 100? If this is a runaway gap, then possibly what we can see, this is a breakaway gap also, because there is a supply area which the price opened with a gap up and there is a rise in the volume. It could also be a runaway gap, which is also called a measuring gap. So if it is a runaway gap, then what could be the potential near-term target? I'm measuring the height of this and projecting it from the point of gap. So next potential target comes at 20,780, which nearly coincides with the all-time high of Nasdaq 100 it has made. So it may come to this particular zone, consolidate, and then finally gives a breakout to make a still higher level and may target to the level what we have discussed in the weekly price chart. So overall trend in Nasdaq 100 is also bullish. Uptrend remains intact because short-term basis it has come in the bearish area. Our short-term trend was down because EMA 21 crossed under EMA 55, but pretty strong bounce back. So there will be reversal chart pattern also here against the short-term downtrend move. Now let us move to the price chart of Dow Jones Industrial Average Index. Let us first go to the weekly price chart. This is the weekly price chart. Here too we can see this index in the last week closed at 40,659.77 and hence it was bullish by 2.94% on a week-to-week basis. Here too we can see the breakout of a rounding pattern over here and then price corrected over here because it has attained the first target of 61.8% expansion level with respect to the rounding bottom chart pattern, which has given a breakout over here. And hence, on resumption of the trend, next potential target could be to 42,000 to 42,100, which is nothing but the 100% expansion level on Fibonacci scale with respect to the rounding bottom chart. Now let us move to the daily price chart to understand the recent price action. What we can see here, price took support here, took support here, took support here, and once again took support here. So it is a rising trend line that indicated the bulls remained in control during the recent time correction. And the price was making higher lows kind of market structure. Now, if you look at the chart pattern, this is the rounding bottom chart pattern which gave a breakout here. First target got achieved, and then this is some kind of complex correction which halted at the confluence of this rising trend line, which happens to be the confluence of SMA 144. Here too, there is an existence of a gap. And this gap ranges from 40,000 to 40,295 is the immediate demand area. And even if the price dips below 40,000, there is another support at 39,800, which has a confluence of EMA 21 as well. So overall structure in Dow Jones Industrial Average Index is also bullish and there is a strong pullback. How much correction it has done? In the recent correction, it has corrected by nearly 7%. And if you check the bounce back from the low it has made, the bounce back has been around 5.5%. So pretty strong bounce back indicating that the correction is over, that the trend is resuming. Now let me tell you what could be the potential short-term target. If I measure the target of this rounding pattern, it has achieved the first target over here, and then this compulsory correction started. So on resumption of this trend, next target in immediate terms could be to 42,150 to 42,200. So what do you think, friends? Will market respect the supply and demand zones, what we have discussed during the analysis in this video? I'll be expecting your comments in the comment section of this video. Thank you very much for watching. Looking forward to meet you very
Willing
soon.
to succeed in the stock market? Join DK's Diamond Club channel membership for fundamental and technical analysis. Learn strategies and risk management to stay ahead of the curve. Join now and attend our weekly meetings every Sunday.